This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
World oil demand this year is expected to grow less than earlier forecast, and output should expand faster than previous estimates, resulting in a more balanced market, the U.S. Energy Information Administration, EIA, said on Tuesday. The agency hiked its production forecasts from regions outside the Organization of the Petroleum Exporting Countries, while also lowering its expectations of demand from developed economies, according to a monthly update of EIA's short-term energy outlook, STIO. The EIA now expects global oil and liquid fuels consumption to grow by 920,000 barrels per day, BPD, this year to 102.84 million barrels of oil per day, slightly smaller than the 950,000 barrels of oil per day growth forecast in its April STIO.
Oil prices fell in early Asian trade on Wednesday as industry data showed a pile-up in both crude and fuel inventories in the US, a sign of weak demand, and cautious supply expectations emerged ahead of an OPEC Plus policy meeting next month. Brent crude oil futures fell 30 cents, or 0.36%, to $82.86 a barrel by 0348 GMT. US West Texas Intermediate crude futures fell 25 cents, or 0.32%, to $78.13 a barrel. Both benchmarks fell marginally in the previous session on signs of easing supply tightness and weaker global oil demand from an EIA forecast report on Tuesday.
Moving on to the top news in the energy sector.
Asian refiners are considering cuts to refined fuel output in the coming months, with some already trimming production in May, after excess diesel supply squeezed profits, traders and analysts said. Refiners also face higher crude costs after Saudi Arabia on Sunday raised prices for June loading cargoes to their highest in 5 months. Lower refinery output could cap crude demand in Asia, home to top importers including China, India and Japan, and weigh on global prices. Refining margins in Singapore, the Asia bellwether, slipped under $4 a barrel in April from nearly $6 in March, LSEG data showed, despite several plants shutting for maintenance during low demand season in second quarter.
U.S. power consumption will rise to record highs in 2024 and 2025, the U.S. Energy Information Administration, EIA, said in its short-term energy outlook, STIO, on Tuesday. EIA projected power demand will rise to 4,103 billion kilowatt-hours, kWh, in 2024 and 4,159 billion kilowatt-hours in 2025. That compares with 4,000 billion kilowatt-hours in 2023 and a record 4,067 billion kilowatt-hours in 2022. With growing demand from data centers and as homes and businesses use more electricity instead of fossil fuels for heat and transportation, EIA forecast 2024 power sales would rise to 1,510 billion kilowatt-hours for residential consumers, 1,396 billion kilowatt-hours for commercial customers, and 1,048 billion kilowatt-hours for industrial customers. Next, we have the top news in metal markets. Most base metals traded lower on Wednesday, as a slightly firmer US dollar made the greenback-priced commodity more expensive for buyers, while investors assessed supply outlook for metals. 3-month copper on the London Metal Exchange was down 0.8% at $9,954.50 per metric ton, as of 0340 GMT, reversing previous gains that pushed the contract to a nearly 2-year high. The most traded June copper contract on the Shanghai Futures Exchange was down 1.3% at 80,000 yuan, $11,073.28 a ton.
The U.S. Energy Information Administration revised its coal export forecast upwards, driven by stronger than expected February data and progress restoring access to the Port of Baltimore while coal production declined in April. Metallurgical coal exports, primarily produced in Appalachia, were expected to reach 8 million short tons, MMST, in April and May despite concerns about the Port of Baltimore, a key export hub, which is responsible for roughly 20% of metallurgical coal exports flow. The overall coal export forecast for April and May also climbed 9% to 13 mmst, contributing to a 4% increase in the EIA's annual coal exports forecast for 2024, at 99 mmst.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures surrendered earlier gains on Wednesday to track weaker soyoil, while worries about palm exports resurfaced. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange fell 15 ringgit, or 0.38%, to 3,915 ringgit, $825.25, a metric ton by midday break. Dalian's most active soyoil contract rose 0.05%, while its palm oil contract was up 0.19%. Soyoil prices on the Chicago Board of Trade fell 0.61%.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.